It's Thursday, December 13th. Welcome to Market Foolery. I'm Chris Hill. Joining me in studio today from Motley Fool 1, Jason Moser, and from Motley Fool Stock Advisor, Joe Tenebruso. Happy Thursday, guys.
Happy Thursday.
Good to see you.
Hey, Chris.
We've got the latest in the Apple Maps saga. We've got the most Googled stocks of 2012, but we are going to start in the world of retail. Shares of Best Buy up 17% this morning on a Minneapolis Star Tribune report that Best Buy founder Richard Scholes will make a bid for Best Buy as soon as Friday. Joe, it's rumored to be, it's not rumored, it's reported to be a bid that's going to be in the neighborhood of $5 or $6 billion. What do you think of this first and foremost? Is this a good investment on Richard Scholes? I get that he's passionate about the company he founded and he's trying to save it, but when you see a story like this, what do you think as an analyst?
See, Chris, I spend most of my time trying to determine who's winning and who's losing, when it comes to investments. And everything I see points to Best Buy simply getting its tail kicked by Amazon. They can't compete on price because of their higher overhead. They can't compete on selection because of Amazon's massive third-party seller army that complements their own listings. They can't compete on convenience because basically what's more convenient than sitting on your couch, ordering from Amazon on your tablet and having it shipped right to your door?
Sitting on your couch with a beer?
Right. Well, I was going to say that.
Maybe.
But even worse, Amazon's gaining so much mind share right now that for many consumers, it's simply the first and the last place that they go to shop. And so I don't see Best Buy competing with Amazon very effectively going forward.
But Jason, just to push back on that, we've talked about this before, that if there is a path forward for Best Buy where it is a standalone, dare I say, profitable company 5 years from now, doesn't that path include a move like this? Doesn't it start with a move like this where Scholes comes in and takes it private so that the tough decisions that need to be made that will have probably a negative effect in the short term, but maybe lead to a positive return in the long term? Doesn't it start with a move like this?
It does. And to be very clear, I agree with everything Joe said there. I don't look at Best Buy as being one of the winners in this space at this point because companies like Amazon, namely Amazon, are going in here and really not only stealing mind share, but every other bit of share available. But with that said, there is a way for Best Buy to exist, albeit a much smaller company. And when we had Alan Wurtzel here not too terribly long ago talking to us about Circuit City and sort of its rise and fall, and one of his suggestions was that they needed to take it private because it enables Scholes to go ahead and make those difficult decisions without having to answer to shareholders or the public as much. And the other thing is that they're going to have to figure out a way to be different. And, we saw in this interview with Jeff Bezos not long ago when they were asking him about getting into physical retail. And he said we'd kick that around, but there's really no reason at this point to do that because what can we do different? There are lots of physical retailers out there like your Walmarts and your Targets that do a wonderful job. That's not where we can go change the game, so to speak. We're going to change the game in online retail. And so with Best Buy, it's going to be two things. They're going to have to, I think, number one, go private. And then number two, they're going to have to figure out what they can offer that you can't get somewhere else. And maybe it's service, something like the Geek Squad. And I tend to believe it's going to have to be something like that because when it just comes to retail goods, they just don't hold a candle to something like an Amazon.
On our Fool.com website, both of you guys have real money Rising Stars portfolios that you manage. And Joe, one of the investments in your Rising Stars portfolio is a short of Radio Shack. So I'm just curious, what do you see at Best Buy? When I see you shorting Radio Shack but not shorting Best Buy, that makes me think that either Radio Shack is just, closer to the cemetery than Best Buy, or there's maybe a glimmer of hope in Best Buy or a relative strength that Radio Shack doesn't have. But I guess my question is, what is the difference between those two companies?
I do believe that Radio Shack is in even worse shape than Best Buy. It's a smaller company. It has even less of competitive advantages going forward. But actually, the most frustrating thing for me, Chris, with Best Buy is that I haven't been able to short it because of this buyout offer that's been rumored for quite a while now. So, yeah, otherwise it would have been.
And to his point there, I think it's a distinction to be made here between a Best Buy and a Radio Shack because Either way, yes. I mean, I think they're in sort of this long-term secular decline in the big box retail space. But something like a Best Buy has an owner interest there in Shoals. You know, he is part of this is he's wanting to protect his reputation and his legacy. Radio Shack is far different. There's no one there really looking to protect that interest. And when you look at the balance sheet and what they have, what they own, it's nothing more than really a lot of obsolete inventory. So there really is no reason for private equity to come in and buy Radio Shack. Whereas I could see some reasons for someone to come in there and actually buy Best Buy.
Just to close out on Best Buy, the stock, right now, with today's pop, it's trading somewhere just north of $14 a share. If the reports are to be believed, it's entirely possible that Shoals is going to buy this stock out at $25 a share. So is that an opportunity for, a greedy guy like myself? I guess I'd put it this way. Talk me out of making that move. Talk me out of buying shares today at, just north of 14 if I believe that it's going to get bought out at 24, 25.
I would say for the aggressive traders and speculators out there, if you want to take a shot on something like that, that's up to you. Yeah. But for the investors out there in the world, there's a lot of companies that offer better risk rewards, and we don't like to speculate on rumors. So I would just stay away from it. I definitely wouldn't short it because then you can get creamed as well. So I just stay away from it.
Fair enough. Moving on to Apple Maps, the 3-month debacle appears to be over. Google Maps has returned to the iPhone with the release of an app just yesterday, Jason. Certainly this is great news for people in Australia who are stranded in the desert. I got to be honest. The sports fan in me looks at this story and just thinks, "Wow, winner by knockout, Google over Apple." Is there any other way to see this than Google just?
There is. I mean, I see your point, and on the face of it, I think it can look like that. I mean, I think I had the Google Maps app loaded in my phone this morning before I got to the parking lot here at work. I mean, when I found out it was available, it was one of the first things I downloaded.
You didn't actually need Google Maps to get to the office.
No, I didn't need it. No, I didn't need it to actually get to work, though that could be believed. But it was one of those things where I've had a couple of unsuccessful ventures with Apple Maps, and it drove me nuts. And it's interesting to see. I mean, Google Maps is the #1 app out there now. Like, it was very, very widely anticipated and wanted. And so I tend to look at this as really a win for everyone. And I do believe it's a big win for Apple, and probably more so than people think, because the thing with Apple is their focus, their specialty is premier hardware. They're just a tremendous hardware maker, and they've developed a good ecosystem to go with it. iTunes, I think, is something that's nice. They've got the Apple TV device, and I like that interface. But it's simple. It's easy to use. People know it. And I think when you get used to your operating system, you tend to want to stick with something like that. And so for Apple users, it was a big frustration in this Apple Maps Mapplegate thing, because Maps are one of those things that could prompt a user to go to a different device. It's something that we use a lot. And so for Apple to be able to get this back into their ecosystem and sort of move on with business as usual, I think is a big deal. And I hope they don't really continue to pursue this map thing, because I just don't think they need to. I think Google does a great job with it. Is just another anecdote here. My wife, she drives a BMW, and the GPS in that car is it's powered by TomTom, and she's constantly complaining about how bad that GPS software is. Again, I think it's just another testament to really the work that Google has put in with their maps to date, and I don't see any reason why Apple would even need to go up against it.
Joe, certainly it's been an interesting few months for Apple, just from the standpoint of for a company that has done so many consumer-facing things correctly, from the devices that they've rolled out to their communications, their marketing, their branding, all that stuff. This really was sort of the rare, significant misstep. We had the apology from Tim Cook.
Sure.
Scott Forstall, the executive in charge of iOS, no longer at the company. I obviously don't know what goes on in Tim Cook's mind, but I have to believe on some level he just decided at some point, you know what, just make this whole thing go away and let's turn the page on this. But this is a company you study closely. What do you make of all this?
The thing that frustrated me the most about the situation is that, and to Jason's point, Apple is all about the hardware, in terms of what they're known for, as well as their ecosystem. And they were getting such great reviews on the iPhone 5 when it first came out. I mean, it was one after another. Critics loved the product. And then almost instantly, it switched from great reviews about the phone itself to negative, terrible reviews about Apple Maps. And it's like they lost so much momentum, I believe, because of this kind of fiasco at this point is what I think we have to call it. And I agree with you that it was a win. Overall, it was a win for Google, a loss for Apple. But I also agree with Jason that at this point, it's good that it's back on iOS, that the Google Maps is available to Apple customers, and it gives them one less reason to switch to Android.
Yeah, I mean, it's important to note, too, we have a tremendous market opportunity out there for smartphone users still. And we're looking at Mary Meeker's Internet Trends report here over the past week, and where you have about 1 billion smartphone users out in the world today. You have somewhere in the neighborhood of 5 billion mobile phone user accounts. Now, obviously, there are repeats there and whatnot. But the fact of the matter is there is still a lot of opportunity out there. And so it's not going to be a one or the other zero-sum game. I mean, it's going to be plenty of market opportunity for your Googles and your Apples to continue to pick up some of that market share. And that's why I think it's important that that Apple continues really to develop this reputation as the premier hardware maker of that operating system that people like, that people know, that people will just continue to use. And I think that you get like an iPhone, you have an iPad, maybe you move to a Mac or something like that. There's plenty of share out there still for that. So I do think it's one of those things that Apple really, to Joe's credit, they just need to kind of move on.
What do you think of shares of Apple? Because certainly we're a long ways off from just I guess it was about 10 weeks ago, the stock hit 705, and now it's down, it's somewhere just north of 500, like 530, something like that. I mean, it's
been a pretty nasty pullback. But I think a lot of the reasons are more short-term in nature. I've seen kind of reasons being put forward, such as capital gains changing. So long-time holders might have an incentive to sell now rather than hold it into next year. We've seen things like margin requirements being boosted could be one of the reasons. So I think a lot of the reason is short-term in nature, and that could be an opportunity for long-term investors to get in now. To kind of use those reasons to your advantage. And I think it's very attractively priced, and I think Apple still has huge competitive advantages going forward.
Sticking with Google, yesterday Google published its annual Zeitgeist report. This is the report that lists the top trending and most searched queries for the year. So they published the list of the most Googled stocks of 2012. Not surprisingly, Facebook number one on the list. Zynga and Yelp were second and third. So, again, not all that surprising when you think of the internet and recent IPOs, and certainly whatever their business performance, these are stocks that have a lot of buzz. But let me just read the rest of the list here, because then it kind of gets weird. Facebook, Zynga, Yelp, Samsung fourth, Arna, A-R-N-A, a company I have never heard of, is fifth. Maybe I should have Googled
Come on, Chris.
I should have Googled
Did you hear about
it.
the fallout with Arena Pharmaceutical?
Let me get through the rest of the list. Kodak sixth, Google seventh, Electronic Arts eighth, Vivis nine, and Super Value was 10th.
Chris, you know what I think it is with Electronic Arts?
Okay.
They've taken out the Create a Playbook feature in Madden, and I have no idea why that's happened. I'm sure a lot of Raven fans out there are still mad about this. Maybe they've been Googling to see when that feature's coming back.
It's their version of Mapplegate.
That's my thesis.
And besides the fact, Arna, Vivis, am I wrong in being surprised by that?
Maybe so. Now, I did a little research onto Arna. That's the ticker for Arena Pharmaceutical.
Okay.
And so Arena Pharmaceutical was partnered up with another. Arena Pharmaceutical is a biotech that was partnered up with another pharmaceutical distribution company, and they were focusing on a drug. I'm going to probably butcher this pronouncement here, but lorcaserin. And it is an investigational drug candidate for weight management. And so apparently somewhere in the middle of May, this drug got an FDA approval of some kind, which essentially doubled the stock in a day. And from there, it's been basically a straight shot up. And so it's made a lot of news because the stock has done really well this year. And I think that's probably why it's been Googled more times.
Did anything surprise you in terms of not being on this list? Like if I were to just ask you, hey, what do you think is in the top 10? What's not on the list that should be?
I feel like we made a lot of jokes about Groupon this year. It's not like you got those things just come off the top of your head, but you got to Google stuff every once in a while. I was surprised that Groupon was not on that list.
Any surprises for you, Joe?
Yeah, I mean, Apple, I think, is probably the obvious one. We seem to be talking about Apple almost every day, and for it not to be on there, that was a little surprising.
Maybe they were following Apple Maps and just
got lost along the way. You can always email us, radio@fool.com, or if you're in the greater D.C. area, you can stop by Fool Global headquarters. Don Sampson, a longtime listener and a pastor with the Crossroads Presbyterian Church in Dumfries, Virginia, actually came by last week, dropped off a note and a very nice bottle of wine. And he wrote, "Thank you for the daily podcasts. I look forward to listening to these to be educated, amused, and enriched. I've heard you and others say that you like bourbon. Have you? Have you, Don?"
Interesting.
I think I've mentioned something about that. You will enjoy this special wine. It was aged in oak barrels that previously contained bourbon. My wife and I discovered this while visiting Trump Winery near Charlottesville, Virginia. So thank you.
I'm glad you mentioned that, you guys like bourbon, because I thought maybe they sent the wine just from listening to you guys speak. They thought maybe you hit the bottle a little bit beforehand. So I'm glad it was something you expressed.
It was tied in. Again,
explicitly.
long-time listener. So thank you, Don, for stopping by, for the wonderful note, and for the wine. So that's great. And again, anyone who wants to come by to catch us doing a taping, please stop by. If you come with wine in hand, you don't have to come with wine in hand, but
Doesn't hurt.
You can come with
Doesn't hurt your chances.
Come with some Tang, or some See's candy. We'll wrap up there. Jason Moser, Joe Tenebruso, guys, thanks for being here.
Thank you.
Full on.
As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. That's it for this edition of Market Foolery. Our producer is Matt Greer. I'm Chris Hill. Thanks for listening. We'll see you on Monday.